Ahoy there, trader, and welcome back. Dive in with me as we embark on another insightful voyage into the world of trading. Now, this is the Anti-Investor podcast where we keep things simple, actionable, and effective. Today, we're going to uncover the 12 commandments of successful trading. So whether you're just starting out or you've been in the game for a while, these principles will help you steer clear of the stormy waters. Now, the markets are an ever-evolving beast. New traders may find themselves lost in this vast ocean, while experienced traders can sometimes forget their compass and leave it at home. And let's face it, without a compass, it's easy to get off course. So, welcome to the Anti-Investor Trading Podcast. We talk about swing trading, stock options, index futures, and the occasional day trade. My goal is to give you the right tools, the correct rules, software to assist you, a community to support you, and if you will allow me to be a mentor to show you the way so that you get real results in the fastest and smartest possible way. Now, let's explore those 12 commandments. The first one, and this is something that I've been a lifelong advocate of, is continuous learning. The markets have moods and they swing, so stay updated and being a student and having a childlike mindset is important. The next commandment is discipline and patience, and this is something that I had a lot of difficulty with early on. I knew that being consistent and the emotional side of trading was going to be one of the more difficult elements for me to master. And keep in mind, it's a marathon and not a sprint. Again, I know it's a little bit of a cliche, but the ability to be in the game long term is more important than a quick win today. So follow the process that you have, develop your strategy and hold tight, even if it's looking like choppy waters out there. The thing that keeps me confident is knowing that I've got a positive expectancy strategy. On average, I expect a return just like any other business in the world. We don't expect to sell out of every product every day all of the time. You would be laughed at if you thought that. And why you think trading is any different is beyond me. So be disciplined, be patient, and have a realistic expectation. Third on my list is risk management. Betting the farm is not a strategy. There's no crystal balling trading. And while I've got an expectation of making money, I don't know which trade's going to make me money. I can't fill my boots, as it were, and hope that the next one is going to be the 10-bagger, the one that goes to the moon. It's an irrational expectation. So keep the risks small and trade consistently. And that leads into the next one. Trade small, scale up, tiptoe in before you leap. When you first start out, you've got a lack of confidence, a lack of knowledge, a lack of everything, to be fair. So starting small allows you to be engaged in the markets, to experience the emotional roller coaster that we all experience and get a feel for what's going on. Again, if we use the sailing metaphor that I like every now and again, you're not going to head out straight into a storm in a rowboat. Which is what new traders tend to do. You're going to start off on a very calm pond on a nice calm day with no choppy waters, and you're just going to get a feel for the water, the weather, the situation, as it were. And you should do the same thing in your trading. Keep it small and scale up when you see success, when you've got the confidence, and build up slowly. It seems like you're going slow, but this is truly the fastest way to growth, not just with trading, but with anything. And again, stay updated. Weather the storm, as it were, keep abreast of the markets. Now, from a personal point of view, I'm not someone that reads the news. I'm willfully ignorant on a lot of subjects, a lot of things, and I'm happy to do that, not just from a trading perspective, just on a personal viewpoint. I just don't like the negativity that the media spins on everything. But that doesn't mean you can't stay up to date with what's going on. Just avoid the mainstream nonsense and the shenanigans there. You can check the reports, you can know when certain strategies are impacted by news events. Oil on a Wednesday, they have the inventory status. That's going to affect the markets in a wild way. Non-farm payrolls the first Friday of every month might impact many markets. Is that going to impact your strategy? And that's what I mean by just be aware of what's going on, the environments that you're in. And if you're swing trading, a lot of these things don't make a huge impact on a day-to-day basis. So the longer time horizons, the individual day-to-day reports are not necessarily meaningless, but they're not going to have a huge impact. And often I find when you've got a positive expectancy strategy, they tend to positively impact your strategy. Now, leverage technology. We've got this wonderful world that we live in where we can, at the click of a button, validate a trade idea very, very quickly. When I first started out in the mid-90s, I was hand-drawing charts. It was difficult to gain that confidence because it took a lot of time, and now we can have an idea. And to be fair, I've just literally sent some messages to my programmer where I had this variation of an idea to profit from essentially a day trading strategy, but from an income trading perspective to sell options premium. And I quite literally described it to my programmer, sent it off to him. He's come back to me with a few clarification questions. And maybe within 1 to 2 hours of me recording this program on a Monday morning, I'm going to have a strategy that I can plug into the software that I like to use, and at the click of a button have a 20-year report thrown out at me and say, hey, is this worthwhile? Is it worth investigating further? And more importantly, is it worth trading, put my hard-earned cash on the line? So I don't have to spend 6 months back testing, forward testing. I can go back over the last month, validate the concepts, and then, hey, go to technology. And we can quite literally find out, is this trade idea or this strategy idea going to be profitable for me? And again, I've got a portfolio of strategies that I use in addition to a portfolio of trading vehicles, whether it be stocks, index, futures, options, etc., so that I can profit on a daily, weekly and monthly basis. And technology in the last 3 or so years has allowed me to accelerate my own development. Again, I'm not a programmer, I'm not a coder, I've got no intention of learning the language. I can just about string a sentence together. I am a trader at heart. So I'd rather hire an expert to leverage the technology that we have, and we've got some amazing advances. Again, we can even use AI. I mean, I've played around with the AI thing. I'm just going to pause on this particular commandment, as it were. You can quite literally go to ChatGPT, and I've already done this, and describe the same thing at perhaps a more basic level to ChatGPT to give you a base code that you can plug into whatever software that you're using and just test drive an idea and its most basic components. And then I can go, okay, well, I need, it's beyond my skill level now. I need to go to my programmer, and they can take it over the reins for the in-depth development that has all the ways that I like to trade with the money management and so on and so forth. Psychological balance. I sometimes describe this as your emotional bank balance is another way of describing it. But we need to keep mental clarity, and I mentioned this earlier where I knew that the psychological aspect of trading was going to be what kept me in this long term. Keep a diary of your emotions, how you're feeling before, during and after the trade that you're evaluating. That certainly was a huge influence in keeping me on the right course, staying the course, as it were. I meditate daily. I have been a practitioner for over 20 years now, so it is something to keep the mind sane. Again, do something physical as well. Go and do some exercise. Again, these are just good life skills as well, not necessarily because it's trading, but you need some balance. Physical, emotionally, family balance, friends. You have a good balance in life. Don't focus everything all on one thing. Again, all my strategies involve around checking in, checking for trades, and checking out in the quickest and most efficient way. I don't want to spend 6 hours looking at charts. It's just a waste of time. Check in, check for the opportunity. It's either there or it's not. It's a binary decision, and then go and do something else. Similarly, we want to be diversified. I don't believe in the traditional bonds stock split 60-40, 70-30, whatever the bullshit is. This year, it would certainly not have worked well, the 60-40 bond stock splits. But you want diversification, and it could be diversification in the number of occurrences that you trade. Trading one setup at a time is not going to make you rich, wealthy, financially free, independent, however you want to describe it. You want multiple occurrences of the thing that you're looking for. So do you have a strategy that can be applied on multiple markets, multiple time frames, multiple opportunities, and can you do that in a time compressed way so that you're, again, not spending 6 hours flogging a dead horse? We want to be able to check in, check for an opportunity, and check out. So have some sort of diversification. The way that I do that is, again, from the swing trade point of view, I have 25 stocks. That's my diversification. I'm looking for 25 opportunities on the swing trade side of things. So I've got the consistency of the strategy of the setup. I said earlier, I don't know which one's going to work. So I've got to trade every stock, every setup on Apple, for example, that develops for me, because I don't know which one's going to work, but I know that when it works, it's going to be a 10 bagger, 3 bagger, a 7 bagger. It's going to make me money on average, is all that I'm interested in. And similarly on the intraday stuff, I trade short-term swings on 60-minute charts. Again, I have 6 stocks that I do that with, so that I've got a small number of occurrences I can check in 2-3 times a week with that checking with that strategy quite easily. On the day trade opportunity, I've got 4 S&P strategies. I quite literally just take whichever one sets up first. They're all a variation of exactly the same thing. Which one depends on, do I want to spend an hour at the table, 2 hours at the table? Have I only got 10 minutes? Or can I spend a couple of hours there? Again, I'm just trying to give something for everyone there. Again, me personally, I don't want to spend hours at the desk, so that last one's off the table for me. I want to be able to check in, check for trade, check out. So that's what I do. So realistically, I've got 3 strategies that could set up, and I'll take the first one. I'm not trading all 3 of them. That's just the way that I do it. I've got a NASDAQ scalper at 10 a.m. Is it there or is it not? It's a very quick in and out type of setup, but has it set up? Yes or no? If yes, place to trade. And again, all these strategies, they can be done around the open. Again, I spend anywhere from 30 minutes to 60 minutes at the desk, and I can do all of these things very quickly. The reality is the strategies take anywhere from 2 minutes to 10 minutes to evaluate, and I can do it all very, very quickly. Again, I'm propped on my own system, as you might appreciate. And the one that I mentioned earlier is I'm developing more of an income style day trading, a 0-day options strategy. Again, it's been on my mind for several years now, and again, with the daily options that we have on SPX, it just means that we can explore that as an alternative variation to what I'm doing. If the day trading trending strategy is not working, then the income strategy should present some opportunities. So I should be able to make something somewhere work on a daily basis. Again, all of these things can be done in a very short space of time. What I suggest to all my students is that they start off with one strategy, whichever one makes sense to them, and then optionally you can add or remove them as the case may be. So this is what I call diversification. It's diversion of strategy and instruments. You don't necessarily need diversity of bonds, futures, indexes, stocks. Go and trade European, whatever. It doesn't make any difference to me. It's just diversification of strategy is the way that I've done that. And again, all in a compressed time point of view of, can I do this, do everything I need to do in 20 to 60 minutes a day or every other day? Now, review and accountability. Keep a diary, as I mentioned earlier. Keep a diary, not an emotional diary, but keep a practical diary. You can take a note of the strategy. Am I emulating the performance that I'm expecting relative to the algorithms that I've written? If I'm not, I get to ask the question, why not? So if we're not tracking what we're doing, I'm never going to have exactly the same as what the algorithm's doing, but if it's emulating or outperforming, then I know I'm on the right track. If it's underperforming, again, I get to ask that why. So after every voyage, I map out what went right, what went wrong, did it lead me astray, and then over a long term, I get to have that comparison with each of the strategies that I'm expecting and refine the routes, for want of better description. Networking is also a good idea. Two boats are better than one. There's very much a nautical feel throughout everything that I'm mentioning today. Engage with fellow traders. Don't compare yourself to fellow traders because everyone's on a different journey. Even though we might be all going in the same direction, some people might be going a little bit faster, a little bit slower, and that's okay because everyone's commitment level is different. Some people have a more fuller schedule than others. Again, I'm quite time rich, but at the same time, I don't want to spend 6 hours every day looking at the charts. So again, I put restrictions on me. So some of my students, they want to go faster. They want to spend 3, 4, 5 hours looking at the markets. So they're going a little bit faster than myself, even though I've got the benefit of trading these multiple strategies. So it's all relative is what I'm trying to say, but nonetheless, we can encourage each other along the way and learn from different eyes, different perspectives, different routes that we're trading. Or that we're navigating even, and we get to share our tales with each other. Again, I have a mentoring group that has just that, and I see it more as a peer group than a mentoring group. Yes, I'm obviously mentoring the students to become better traders and to benefit from my strategies and to make sure that they're applying them in the right way. But then someone else in the group may be an Elliott Wave aficionado, so they can bring that to the table and look at the strategies that we all use through the lens of, say, Elliott Wave, and say, well, this can be interpreted in that way. And someone might look at Fibonacci, and someone else might look at something else. We all bring something special to the table, so we can just apply these filters that we can all benefit from, so that we look at the same things but just through the eyes of someone else, the experience of someone else, so that we can all progress in hopefully a faster and smarter way. Next, we can stay humble. Again, while I'm the admiral of the fleets, for want of a better description, and the sea is vast, I don't consider myself any better than anyone else. I've just been doing it a little bit longer, been a little bit more successful than some other people who are coming up behind me, and that's fine. So just stay humble, respect other people and their knowledge, their experience. Like, everyone brings something to the table that we can all benefit from. It's again, if we were talking about King Arthur, the Knights of the Round Table, there was no one at the head of the table. Everyone has an equal share of respect and knowledge and viewpoints. And just keep that in mind. It doesn't matter whether you're brand new. That brand new trader has a perspective that's not got bias. They're looking at things with quite literally fresh set of eyes. I've got a lot of biases in the way that I trade because of the things that I've influenced, and I sometimes describe this as the curse of knowledge. I'm cursed with knowing a lot of things. Not all of them are good things. So my influence, or that does influence and comes out. So I have to stay humble that, like, those influences are not always positive. So I've got to keep myself in check. And sometimes the newer trader can put a perspective and a viewpoint in place that makes me literally go, pause, and just reflect on the fact that, I'd forgotten that, or I'd discarded that viewpoint. But now with 30 years of experience and having that appreciation that the newer trader is just as welcome to bring something to the table, then it allows me to reevaluate that old viewpoint, and maybe I can, put it to one side, dispel it for myself, put my own demon to one side. So again, I'm not, afraid of taking on new viewpoints. And again, as I said right at the top of the session today, always have a childlike mindset. There was a gentleman called Paul Sheely, in the late 90s that I came across. I know it's not a new saying, but he was the one that kind of introduced me to it, and it just stuck with me. Always have a childlike mindset, be open, ask questions, and again, as we're saying here right now, stay humble. Lastly, and again, finally, to finish on the nautical metaphor, know when to come back into port, know when to dock. Sometimes it's best to repair, rest, rejuvenate, and just recognize when to step back down and weigh anchor. Sometimes not placing the trade is more important than placing a trade. I sometimes have talked about this in context of I'm managing the trader, not the trade. Again, I know the trade's going to take care of itself, but I'm putting this mechanism, or I'm taking this action to allow me to continue with the trade because I'm managing the trader. So again, this is the same thing. Rest, repair, rejuvenate, maybe take some time off, time out. you know, it's important to keep yourself recharged. Again, there's nothing worse than revenge trading and having bad judgment with trades, because it's money on the line and we get instant feedback with what we're doing. So we want to make sure that we don't press the wrong button at the wrong time because of fuck it, why not, let's just see what happens. We've all done it. We've all done a silly little trade, and sometimes it's on the back of successes. You get cocky, confidence, overconfident, over cocky, where you've had a run of trades. And I remember one instance just a couple of months ago actually, where I had a huge win, and on the back of multiple wins. And I acknowledged to the group that we're at, I'm going to place the trade, but you know what, I'm going to do a third of my position size, because while I don't want to not place the trade and talk myself out it because there was a genuine setup, I didn't want to get cocky and overconfident and sabotage myself because of this false sense of security. So that's exactly what I did. So I actually reduced my position size because I was managing the trader, not the trade. The trader was going to place anyway, but just because of my emotional state of mind, I was, euphoric, and we all experience these things. The emotions don't go away. Whether you've been doing it, 6 days, 6 weeks, 6 months, 60 years, we all experience these things. But as you get older and hopefully wiser in your career, you start to develop mechanisms that allow you to be in the game for 20, 30, 40 years. So that's one of the things that I do. Manage the trader, not the trade. Know when to come to dock, know when to take a break completely, and not trade at all. Take some time out, recharge. Again, I take regular time out. I like to go for 3-4 day breaks. Spend some time in the woods, go nature, go and spend time in nature, and again, just recharge the batteries. So know when to dock. Again, it's probably one of the more important things. A break is as good as a rest, as the saying goes, and just know that you're under the weather and go and recharge the batteries. So if you want to make these commandments and a whole plethora of others second nature, dive deeper in our community, and I promise you that you'll navigate the markets with increased confidence. If that is where you're at and you want to talk, shoot me a message. There's some information on my website, or you can follow the link in the description below this, wherever you're listening to this. And shoot me a message. What I promise to everyone is I'll always point you off in the right direction, even if what I do isn't right for you. Again, that's a huge part of this journey that we're all on, is finding the right thing for you. And if it's not right for you, based on what you've told me, hopefully I'll be able to point you off in the right direction. And if it is right for you, then we can have a longer conversation and we'll take it from there. That's all I can promise everyone at this early stage. So the essence of it all, what we've spoken about today, trading isn't just about the numbers. Again, and of everything we spoke about, I only touched on strategy very briefly. But it is a blend of strategy, it's a blend of psychology, it's a blend of constant growth. It's, a combination, a hodgepodge of a lot of things that make anything successful. And the most successful most successful traders are those that marry knowledge with resilience. So just keep that in mind as you're looking for the next opportunity on the financial markets. And with that said, I will see you at the same time next time. Toodaloo and bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.